Today is Saturday, March 5, 2022. Let's analyze what the stock market did yesterday. This is a chart of the S&P 500. We are in this trading range between 43.90 and 42.90. That's a 100-point trading range. Pushes above this level, and which will coincide with the 20-day moving average. That will be a buy. That will be a very simple setup. Above that as a buy. Below here, that's a sell short. I am not trading anything in between until we move out of this trading range, either to the upside or the downside. I mentioned in my previous video, level that I was watching was 43, a low be this low right here, 42 of no 43.20. Well, it dipped down below that today. I did not get involved. It was a gap, big gap down and quickly sold off. So I was hesitant about shorting up here. Instead, I decided to wait and see how it would behave around this pivot point, 42.90. And it dipped 6 points below that. That was a low. The low was 42.84. Yes. During the day I was watching it, I placed my order to go short if it dipped below the low of the day, but it didn't happen. Got a quick bounce and it closed right on the 10-day moving average. Been trading up and down these moving averages, so I'm just going to wait until it moves out of this trading range. Let's now take a look at the Nasdaq 100. This one, big sell off today. This one doesn't look good. Dip below this trading below this pivot point, which should have been very strong support. Dip below that. Mentioned in the previous video that I was watching this trading range between here and 14,400. I said pushes above this level, I'm going long. Dips below this pivot point and I would sell short, and that's exactly what I did. So for the record, I am shorting the Nasdaq 100 via the S triple Q ETF. It is now below all these moving averages, below this pivot point. So this one, I expect a lower prices. I'm betting on a multi-day downtrend. We'll see if that happens. My stop is above the 5-day moving average, and right, I think I placed my stop around 14,200, right below that 20-day moving average, which is quickly declining. Look, this low proved to be a strong support. Did it once here, twice, and then yesterday also. Something to note. This is a 5-minute chart of the Nasdaq 100, just in case you were curious where I decided to go short. Level that I was watching, I said it was 13,900. That's this level right here. Bounced back above that on the way down when it made a new low of the day. That's when my order executed and I shorted the Nasdaq 100. So that was just under 13,840 right here. Now for the Dow Jones Industrial Average, this one is very obvious that the path of least resistance is south. It is below all the major moving averages, including the shorter term moving averages of 5 and the 10. So going forward, this one's telling you that it wants to continue going down. This one looks like a short if it dips below this level, 33,250. I don't really trade this one because it's all over the place. Technically, it doesn't trade very clean compared to the S&P 500 and the Nasdaq 100. That's the main reason why I don't really trade the Dow Jones. Now the Philadelphia Semiconductor Index, this one got worse. Level that I was watching for the last few trading sessions was 33.50, this area here. a push above the 200-day moving average, that green line, that would have been a buy. But it is so far away. It's all the way down here now, so I don't see that happening anytime soon. To the short side, I really don't see any pivot points where I can sell short. This one is all over the place. I don't really see a tight trading range where I can say below this level is a sell short. To the upside, this one was very clean, very clear, very simple setup. Push above that, um, that would have been a long. Yeah, this one is below all the major moving averages, even the shorter term moving averages. So path of least resistance is down. I would not be surprised if we get a little bounce, but I don't think has much power to push back above 3350, this zone right here anytime soon. So but we'll see. And now let's take a look at the Russell 2000 IWM. This one looks bad. It is now below all the moving averages and below that pivot point we've been watching for the last few weeks. 199, close below that. So this one is implying lower prices. It is not too far away from that pivot point. So, Monday we can quickly push back above that level and these moving averages. But so far, this one is implying lower prices if it cannot quickly push back above this zone right here. Now that I'm analyzing this chart, today's low, that was a very strong pivot point. Got it here, here, multiple times the last few weeks. So, wow. If it opens on Monday around a flattish open and then dips below Friday's low, that could even be a short. I will be watching that level very closely. And that concludes my analysis. Remember to always have a trading plan for the following day, always take profits along the way, and always cut your losses. Thanks for watching and for subscribing also.